Hello and welcome to this channel, Winning Pips. This is the next video. Since we've been able to set up our TradingView charts, we are set to start reading price charts and market structure. So that is our next topic. Take your time, patiently watch video to the end, take notes, and you have a question, anything, ask in the comment section or WhatsApp me, or you reach me through my social media handles, WhatsApp, Telegram, and all that. Alright, so this is GBP USD. This is our chart. We're going to look at it and look at how to read price charts. So before we come to the red charts, so knowing how to read the charts is like a driver knowing your road signs and how to apply them. So that is that. It's as simple as that. Very simple stuff. So alright, so you are continuing. So let's look at how the chart moves. Price action. So let's quickly grab our path to. So this is where the market starts from here. It moves upwards, comes down, it moves, comes down, it moves, comes down. Okay. This time around, breaks this particular point, then it go up, it's now going down. So you see how the market moves. So are you following? Alright, so go again. That's order. And it goes up, it comes down here. So you see that? So let me pull this thing backwards a bit so that sorry, so that you look at something from the real chart, from the real market. So this is how the market moves. It doesn't move in a straight line. It gives us an impulse move, then it retraces. So they move from here to this point to that point. This is a swing movement. So this is a swing low, swing high. So the swing points. So it just give us a major move, then it's pause a bit by retracing. So what happens here is what we call retracement or pullback. So after giving us a major move, it will pull back. After it has pulled back and the pullback is over, it will continue in its direction. So it went up, then came back. There's another pullback. So after some time, it went up again. It's retraced or it put back. Then so this time around, there was a market shift. It changes its direction. So as it was going up, it comes down a bit, go up again, comes down a bit, go up again. This time around, it came down and bypassed the initial down. Now it's this low. It bypassed this initial low. It went up, but it couldn't supersede this high here. So this time around, as it's going up, it's just come down and I mean break this low here. So now giving us lower lows, okay, in that order. So let me quickly delete this one. Let's look for another, then so that you just get the understanding. So when you look at this one too, let's grab our path to, it's from here. Let's start from this particular point. So it comes here, it retraces and an impulse move, retracement or pullback, retracement or pullback, an impulse move. You get it? So the market retraces again from this point to that point, and it moves back downwards. Then it comes up here. So when you look at it, you can see this downwards move couldn't break this particular point. So it seems they are on the same level. So when you get that, you have something you call double bottom. Okay, so double bottom. So this, so when you, as we go further into details throughout this course, you get to know all this. All right, so it went back up again before finally it broken this particular point or these 2 points, okay, inside. Then so you see it doesn't move in one direction. This is how the market moves. All right, so after, now that we are aware how the market moves, let's get to know some of the basic principles that govern the market movement, so that you get to know that this is how the market, the direction the market is trying to take, or the direction of the market. You have two trends. You have the uptrend and you have the downtrend. Then you have the pause phase, when the market is indecisive. It's the market is not going up, neither is it going down. So let's look at them one after the other. So we have the uptrend, that is the ups, it pull back, it goes up, pull back, goes up, pull back, goes up. So this is what you call uptrend. Okay, so when you have a market this way, it's known as what? Uptrend, meaning the trend is what? Up. So you have the uptrend, okay. Let me bold it and increase the font size. Alright, so that is that. So let's look at the other, the opposite. That's the downtrend. Let me pick it from here. So it comes this way, it retraces, comes down to take off, to break the initial low, then it comes lower than this low, retraces, comes down, retraces, comes down, retraces, comes down. So we have this one to be a downtrend. So this is down. So this is our downtrend. Okay, this one, the impulse move goes down, it retraces up, then goes down. So that is that. So you have the next one, which is the, call it consolidating or sideways. for this particular one, the market is resting or even decisive. It's not showing any actual direction. It just go up a bit, but still comes within something like this, something like that. Yes, this is what we call consolidating markets or sideways. So mostly we get certain patterns here. That's an advanced pattern. That's where you get the crowd, the cipher, the butterfly, the shark. So this is a pattern. This is one of the patterns. Okay, so this is a butterfly. This is a roughly somewhere butterfly. So as you advance through this course, you get to know all this. So let's quickly look at some basic principles that will let us or help us identify an uptrend or a downtrend. So let me quickly do away with all this. Sure. Alright, so in a trend we have an impulse move like this, then a retracement, good. So let me quickly grab the horizontal tool. Okay, so this is our starting point. So starting point, good. So this is our starting point. So this is an impulse move. So this is our structure high, new structure high, because as the market starts from here, it got here, so it gave us a new high. So this is new structure high. Let me shorten it so that you can move faster. So new structure high. So the market from here has given us a new structure high. So this is the market structure. Okay, so before you can consider this to be an uptrend, after retracement or after the market has pulled back, our next move or the next move should be able to break this particular point. So let me grab my horizontal tool, place it here nicely, good. So this is pullback. Pullback or retracement. Pullback. So now our next move. So our next move, it can test this particular high, but if you don't break it this way, you cannot consider this to be an uptrend. So we have a principle called, let me write it here, have HHHC and LLLC. So the H, this is higher high, higher close, and this is lower low, lower close. So we use the higher high, higher close principle for uptrend when you are in an uptrend. And what does it mean? What it means is that when there is a pullback, our next impulse move, which is this particular move, should take or should break this new structure high. So let me grab my rectangle too. So let's say we have this is a candle. Let's assume this is a candle. So let me change it to green. So this is a green candle. Then alright, so let's okay, let me still use this and change the color to green too as well. So let's say this is the candle that went through or tested this particular high. So what the higher high, higher close means that this is the high of the candle. This is the low of the candle, the range. So the high, the low. Good. So since this is the high, since this is the low, it should give us a higher high. So it has given us a higher high and higher close, meaning where the closing point of this particular candle should be higher than the level here. So let's say if this particular candle should have been something like this, should have been something like this. So this is a higher high but not a higher close. It was not able to close above this particular red line. Okay, so this is the new structure high, the high here before the market pull back. So because this, though the weight penetrated, but the principle is that the full body candle should close above. So that is what you call the higher close. So meaning it should be something like this or that. So when it happens like this, then this high here is broken and our new high will be where this candle will close, and if it continues fine, if it don't continue and it pull back, still it is considered as the new high. I hope that is clear. Good. So that is what you call the higher high, the higher close. So if this initial point closes higher than this one, then this automatically become a new structure high. Then pull back, then we go again. So since the market has pulled back here, this is our new pullback. Then our structure line, new structure high will just be here. So you bring our horizontal line here, meaning this is our new high. So if you still want to believe that you are in an uptrend, then our new impulse move from the pullback, after the pullback, should be able to break higher high and higher close of the new structure high. So it pulls back, then when after it has pulled back, you move your point here, good, to see whether the market will still push to break this. If it's not able, then see that it's consolidating or maybe it's changing to a downtrend. So in this case, let's say if the market behaves something like this, see it's not able to break, so still there are new structure high. This is our new structure high. So if the market move from here to this point and it's not able to break, it comes here. At times it can move around still to there. This is called internal structure before it will break it. So when it breaks it this way, since it has broken this with higher high, higher close, this will be our new structure high. Okay, so this is considered to be our pullback, but this one is not our low. because it was not able to push the market through. It was this particular low that pushed the market. So this is our pullback. Okay, so that is that. Then so our new structure, how you move this one here in that order. So if the market pulls back and is not able to close break above, then it comes down to break this particular point, meaning it's been a market shift or change of character, meaning now moving from an uptrend to a downtrend. So it will just come back this way and go. You get it? Why? Because when you look at these lows here, this is low, this is low. So you have something called, so this is our high. This is high. This is low. This is the low of the price. So what is pullback? The price here is low. So now we had a new high. So this high, when you compare this high to this high, to that high, you can see that this one is higher high. This one is higher than this high is higher than this high. So in an uptrend, we mostly get higher highs. So we are going to have this one will not be high to we just be higher high here. And when you come down here, instead of getting low, this is low, but this low here is higher than this low. So this is what? Higher low. Okay, so this is low, this is high, but this high is higher than this high, so this higher high. This low is higher than this low, so this is what? Higher low. So in uptrend, you'll be getting higher high, and the pullback will be higher low in that order. So you could see that none of the pullbacks here was able to break the low. So the moment the low is broken, meaning there's been a shift in the market, in the price action. So the price is moving from uptrend to downtrend, but mostly it consolidates before changing to downtrend, or at times you just change straight away. So you should be mindful. So when you look at this, so you see there was an internal structure here. So this low was even broken, but this is the main low that pushed the price, but it couldn't break this particular high. Then it pulled back, it went, these two couldn't take this particular high point. So we had a low here, lower high here, instead of higher high, you had a lower high here, and it came down, and this low broke this low. So this gave us lower low. So if your care is not taken, you might think the market has changed, but this is the actual low that pulled back from this high. So if this one should have been taken, then you wait for confirmation that the price is now changing to a downtrend. But since this one was not taken, it's still an uptrend. Okay, so it break this high up here. All right, so that is that. Now let's quickly look at the downtrend scenario too. So this is our starting point. Come down, pull back, come down. So the same thing. So this is our low. Okay, so before this will be our new low, that's the lower low. It must, that's where you get the lower low, lower close. You must close lower. So meaning the candle to shouldn't be something like this. But it should close. So let me change this one to red since you're in a downtrend. So it should close below this high. So that was the lower close. So when it's happening like that, then it is confirmed you're in an uptrend. Sorry, you're in a downtrend. So it pulls back, then it comes. So lower low, lower close, pull back, lower low, lower close. Then you are in a downtrend. Lower low, lower close, in that order. So this was a downtrend. But for consolidating, the market is directionless. There's no direction. It's not going down, it's not going up. So that is the difference. So now let's move to the charts, the real charts, and look at how to apply this higher high, higher close, lower low, lower close. Alright, so let's quickly look at that. So let's take it from here. So this is our starting point for this particular move. So this is a swing move. So the swing low, and this is the swing high. So the market went this way from here, it went this side, then it retraced back, it retraced back here. Alright, so we are going to, this our new structure high, or our high, whether new structure high or high. So we are going to place our horizontal line here. Good. So before you can confirm this to be an uptrend, this high should be broken. So when okay, so let's pick our trend line 2, then we cross. So this is it. So you can see that this particular candle, alright, so this one was Friday, it's the market closed, so it was open on Sunday, so there's a half a gap here, so it went back in to a direction. So this candle here closed, but was not able to break this particular red line. So still, after the close of this candle, still the market cannot be confirmed to be an uptrend. But after the close of this particular candle, you have a higher high and higher close. It closed above this line, so this confirms that the trend is what? Up. So that's the higher high, higher close. Good. Now let's continue. So we here, from here we came to this side, the pullback. So after this has been broken with higher high, higher close, this is now our new structure high, or the higher high. So now this is high, this is high, but because this high is higher than this is all higher high, and this have a low here from the starting point, and you have another low here. But because you are an uptrend, this low is higher than this low, so this was higher low. So higher high, higher low, higher high, then come again, higher low. So let's look at this. The market pulled back, it went up again, but this it couldn't break our new structure high. You see this particular candle here, it's only the wick that tested this level, and it pierced through that, but the real body candle body couldn't close above it. So you cannot confirm this to be our new structure high. Still, this is our new structure high, so I can consider it to be a little bit of consolidation. So let's see what it moves. So now from here to, it came down here, so you could see that it has broken this our low. So instead of higher lows, now you now have a lower low, but this low is lower than this. Okay, so you can even bring it here, since you don't have much structures there. So let's consider it to be here. So let's move on. Just go. You have it down here, and finally it came up here. So you could see that still this structure, this level was still intact until this candle closed above it. So this one PS tested it, but it couldn't close above it. So after this one went up, close above it, you are still in a trend. So now this is our new structure high. So you see that it came, it went back. So now let's put our horizontal line at our new structure high. So you could see that the market went, it went closer a bit, This one too tested it, but I couldn't break it till now. Let's continue with our back. So we came here, went there, came, went, tested it, but I couldn't break it. So still, this is our structure high, or our structure high. So it came down. So now this low here, then that low here, it has been broken. We were recording higher lows, all the lows, right? So when you look at this particular two, they were on the same level, so we call them double pattern. So this is a low, this is higher low, higher low, higher low. But this new low here has given us lower low because it's lower than this. So when you look at it, it's lower than the previous two here. So this tells us that something is shifting. The market is now changing from uptrend to downtrend. So we came back here, then it gave us another lower low. You see? So this is what you call market structure. So now that you are in lows, you are in a downtrend, then you bring, since this is our new lower structure, you bring your point here. Before you confirm that this market will trend downwards, there should be a lower low, lower close. So this candle here is lower low, the wick is lower, and it has closed below this level. So this is what you call lower low, lower close. So this confirms that the market is what, in a downtrend. So always check your levels and make sure the levels are broken. If it is an uptrend, higher high, higher close. And it's a downtrend, for confirmation that the trend is still down, you have lower low, lower close. So now let's quickly look at different charts. So GBP, let's see, if I don't want us to look at just one chart, like a GBP, okay, GBP card. All right, so let's look at that one too quickly. So when you come here to this whole phase was consolidating. So this is an example of a consolidating market. It's directionless. It's neither is it going up or down. See, so it's just moving, resting before boom, it broke all these levels and it went up. Okay, so that is that. So that is a consolidating example for consolidating market. So let's quickly look at how to identify the markets. All right, so let's start from here. So we have our starting point here. It moves up, pull back. So we have our high here. So we draw our horizontal line here. Okay, so before you can consider it to be an uptrend, you see this particular candle went up. It pierced, it tested this level, but it couldn't close above it. So still, if you are in a trade or if you are watching the charts, you could see that still this does not give us a confirmation that the trend will go up. But when you look at this one, it closed above it, though it's not all that big, but still it closed above it. So it went there from here, the closing above it, pulled back, then boom, it went up. So that is that. So you can see when this is our new high, structure high. So you can see that if it's our horizontal two lines here to this candle, that candle, they closed above this level, telling us that still the market is what, in an uptrend. So from here we went this way, came down, that's a pullback or retracement. We couldn't take away this level, so this is our new level. This is our new level. Okay, this is our new level. This up move. This is our up move. Couldn't it tested it, but it couldn't close about, so it came back. So it couldn't also close below this low. So you are in what? High. So this is our low. Came here, another low. So there was a little bit of consolidating to around this area. So I hope you can see that. So here it's also a form of consolidation. The market consolidated a bit there before it give us that impulse move to give us the new structure. So this our new structure here has been broken by this particular candle. So that is that. Then it retraced, came back here. So this low, this pullback here has been broken. You can see that. So this is our new structure. The market, although this candle was able to close above it, but still the market came down, took out our new low, giving us, instead of getting higher lows, we had lower low. So when you get a lower low, when a main pullback or a main low is being broken, that signifies that the trend is what, changing. So this is how we will go about it. So there is a key principles that drives the market. So just be practicing. Look at how the market moves, the movement of the market. So it's just everywhere. See, so you have an initial, have a strong impulse move, it retraces, comes down, retraces, comes down, retraces, good. So that's how the market moves. So you can just draw it here. And talk of retracement here, and come down. Like that. So when you draw it this way, you just follow it with your structure lows or structure high. So when they are being broken, so if an uptrend, higher close, then it gives you a confirmation that still the trend is an uptrend. When it gives you lower low, lower close, it's very important. Not the wicks, it's the body of the candle. So that is very important. You should take note of that. So you can re-watch this video again about 2-3 times for much understanding, and after that I recommend that at least 5 different markets. You just open your chart to 5 different markets. Like I said, you come here, come to forex, you have a lot of markets there. You just go to GBP, card. Let me just clear this one so that different markets will show Euro USD, USD JPY, GBP JPY, Aussie, AUD USD, New Zealand USD. There are many. Just pick at least 5 of them, so that you just go through, practice. First start with the market movement. You draw your lines, the impulse move, pullback, impulse move, pullback, impulse move, that order for uptrend. When you get to markets like the consolidation market, the consolidating market, you can ignore those ones, or you can still be doing, so that where the transition periods to, or where a market change from uptrend to downtrend, then you follow the downtrend too. So just be drawing. So when you are done with that one for about 5 markets, then you come back to also practice the higher close principle and the lower low, lower close principle. So I think doing that, you just get familiar with the market structure, how the market changes from one trend to the other. So this is very basic, and these are the core principles. You don't have to, we have a lot of terms and teachings in forest when it comes to forestry. But I can assure you, you don't need them all. You only need the core principles. The core principles. So these are one of them. So when you get the core principles, you just apply them and simple stuff. Nothing complicated. Nothing complicated. It's very, very simple. Just I have to be disciplined and have to follow, because most of the times a structure will be tested and you might think it has been broken. No, just wait for the candle to close so that you see whether it has been broken or it was just a wake or just a test. So these are some of the things. So just pay attention, take your time, take the pen, sit behind the screen, walk through the charts, and I'm sure things will be fine. So make sure you subscribe and you share this particular video. Thank you for watching, and see you in the next.